Michael, appreciate you calling in. Great to kind of get your take on this. So Snap says it's the macro environment, to some degree echoes what we've heard from some consumer companies, that things really did slow down sharply in the last month or 6 weeks. But can we take that on face value, that this is really what's happening in the digital ad market as it regards Snap?
Yeah, I think it is. I think it's a combination of e-commerce slowing down, retail slowing down, the consumer on the low end being hurt. It's all wrapped together and really killing Snap in terms of what they're seeing.
Is there anything about Snap, its particular franchise, its place within the digital ad ecosystem, its exposure to, the TikTok audience, if there's overlap there, that maybe means it's a little bit worse for Snap in terms of advertisers deciding to tighten budgets and leaving them on the outside?
Yeah, Mike, those are great questions. So let's frame it. The biggest risk you have is brand advertising. Because brand advertising is hard to prove, right? So when things slow down, brand gets cut. Snap has exposure to brand. The safest place is search, because search is intention. They've got no search. What they focus on is that young audience, right? And if that young audience goes without clicking to buy something, they're really at risk, right? So to your point, it's not a bellwether by any means. It's a great reflection on kind of a mini audience, but I wouldn't read that across to search. I wouldn't read that all to Facebook, right? I think it's a Snap problem because of its narrowness of its niche, right? I totally agree. That question makes a ton of sense to me.
Yeah, and I guess, we have Meta down, 9%. It's still a little bit above its lows. Clearly, there's a much bigger earnings base there. And when it comes to Snap financially, I mean, clearly, it's generally been losing money. There's a lot of, stock-based compensation issuance. It seems like it really needed very rapid top-line growth to make the model fully work and justify the valuation. Where do you sit with that right now?
Yeah, so I agree with that too. It's a bad on me. We've been very skeptical about Roku and Twitter because those companies really don't earn anything. They don't have strong cash flow. We thought Snap could outrun its cost base and its stock-based comp. We really believe that the company could compound growth at a very high rate the next few years. They're under-monetized relative to their peers. So we've been on the bullish side of that trade, obviously terribly wrong. And to your point, the risk you have now is if it's slowing down to these levels, there's no valuation support, right? There's no cash flow. There's no earnings power. It's really a growth story that has to be a prove-it-to-me story. And to your point, it can keep falling because there's no earnings support here. Biggest difference.
And, yeah, I mean, is there anything that, would you expect Snap to be doing strategically to try to get around this? Or is it just about, maybe cutting back on costs and waiting for things to firm up?
Yeah, you heard, I think you saw in the memo that Evan Spiegel outlined slowing down spending, looking to be more thoughtful on expenses. You have to do that, right? So the problem they have is that, to your point, the cost structure is based on a vision of forward growth that's not achievable right now. There's not much they can do. They can't cut their way to profitability. They need to invest in growth. So to me, it really lengthens the timeline to be rewarded by owning Snap. You have to wait now through whatever cycle we're going to see to get to the other side. So I totally, the selling is probably overdone, but I get the mood of the market. I understand what's going on. Mm-hmm. And now you have to be proven, that there's growth here, and you have to wait, 2, 3, 4 quarters from here to see what happens.